This is my forecast for the third trading week of January 2025, my personal outlook on the markets, and my plan for how I intend to trade them. As usual, we start on the economic calendar, and boy, this week is studded. So, Monday doesn't have anything, pretty chill. Then Tuesday, we have PPI, that's a big one. Wednesday, we have one of the big boys, CPI. On Thursday, we have retail sales for the dollar and GDP month on month for the pound. And then on Friday, we have retail sales for the pound as well. So, what's the plan? As always, if I see a trade on Monday, well, I'm probably not going to find any trade ideas on Monday, but if I see one, I take it. Tuesday, PPI is coming out in the afternoon, 2:30. That's my time, UTC plus one. So if I see a trade during London session, I take it. And PPI is not the sort of news release that I'm really worried about. So if I'm in a trade and that trade is in profit, for example, ahead of PPI but hasn't hit my target yet, I might hold it, right? But I mean, if it hits my target before PPI comes out, even better. For CPI, I'm not trading before, during, or after. CPI days, FOMC days, NFP days, that's my new rule. Don't trade them. Thursday, I'll trade retail sales and GDP month on month. Not really any problem. Unemployment claims as well. And then Friday, of course, if I have a setup, I will trade as well. How will I be trading? Well, my bearish bias continues. On the euro, this week closed bearishly. Now, it did take out this weekly swing point, tapped into this fair value gap, and yes, we are in a monthly fair value gap. But I'm still bearish until I'm wrong. That's my outlook. And so this is what I'm looking at. If we go down to the daily time frame, what we can see is that a fair value gap has formed right here. What I want to see, and you can see that I have an alert there. So if price trades up into this fair value gap, let's say Monday, Tuesday, before Wednesday, maybe, right, and taps into it, I'll be looking for a 15 minutes bearish engulfing candle to take me lower. That's what I want to see on euro dollar for me to get into a short trade. Same thing with the pound. I have a daily fair value gap there as well. This one slightly bigger. You can see it right here. And what I want to see happen. Why is it not showing? So there's a daily fair value gap here as well. I have an alert set right there. When price trades into the daily fair value gap and taps me in, you can see that this daily fair value gap overlaps with this order block, but I don't use order blocks, I just use fair value gaps. So again, if price trades into it, I will look to take a short trade coming back down to the lows. Pretty simple, pretty straightforward. New Zealand dollar also happens to have the exact same setup. You see, daily fair value gap formed here. If price trades into it again, and one thing I like about weeks that set up like this is when you see the exact same fair value gap in the exact same location on the chart for all the instruments that you trade. It's usually a good indicator because sometimes there will be a fair value gap somewhere but no fair value gap in another place. It can, cause some hesitation in whether or not you want to take the trade because while it's at an area of interest for one asset, it may not be in that area of interest for another asset and so. But it's good that I have. So whichever one triggers, whichever gives me the best risk to reward, whichever entry looks the most appealing, maybe the engulfing is stronger on one asset versus another. That will be the determinant for which one I choose to trade. But it's still the same trade idea. So what I'm that's what I'm looking at for this week. That's how I intend to trade it. Another update is that I've taken gold out of my watch list. I took a loss on gold last week and there was no reason for me to take that loss. I've noticed that my style of trading doesn't gel well with gold. Gold is very volatile, highly manipulated. And so a simple take out liquidity, tap into a higher time frame fair value gap, gave me the engulfing candle, the rejection candle, whatever you want to call it, and then go long and then put your stop at what you expect to be the liquidity rate. Doesn't work on gold. Gold can spike into that level two times, three times, four times before eventually doing what you want it to do. And unfortunately, I don't trade with bigger stop losses, or giving accommodation allowance. I my style of trading relies on precise stop points. If this swing point has formed, I want that swing point to be the swing point from which the move that I'm anticipating to occur originally. So I'm taking gold out of it. Euro dollar, pound dollar, New Zealand dollar, plenty enough for me. So that's my outlook on this week. That's how I intend to trade.